Here are my 10 most insane property predictions for 2021. I assure you, you want to watch all of them because this year is going to be massive. Hey guys, my name is Ravi Sharma and I am the founder and buyer's agent here at Search Property. Thank you so much for joining me on yet another episode of Search Property TV. If you're new here, smash that subscribe button, hit the bell icon so you know when I'm going to drop the next video. And on this video, we're actually going to aim for 300 likes in the next 2 days. If we do that, right, and I'm really relying on you, is if we can get 300 likes in the next 2 days, I will release the best places to buy in 2021, and I'm gonna release it this week. So let's make that happen. Now let's jump in to the top 10 predictions. Number 1, pent-up demand will flow into other asset classes like property. A lot of research came out and said that we've actually, as Australians, as a nation, have saved a lot more money during 2020 and this supposed recession. In fact, we've saved $110 billion in the last year. So Australians are cashed up and they are ready to move. Now, obviously, you're gonna see all my predictions here, and then at the end of this video, I'm gonna tell you exactly what my thoughts are with all these predictions and what I think is gonna happen. But savings rates at an all-time high, this means that we're gonna find ourselves having that cash flow into things like property. Number 2, savings rates will continue to remain low. You've heard me time and time again say this, but bank deposit rates are absolute garbage. Now, I think on average, we're at about 1%. In some banks, we're even lower than that. And what that effectively means is if it's at 1% and I put in $100,000 into my bank account to earn interest, I'm only going to come back with $1,000. Now, you don't need to be a mathematician to figure out that is just shocking. So what I think will happen in 2021 is that those rates are going to remain low. In fact, I think we could actually see further declines in those rates. And what that will mean is ultimately people that have this money that's cashed up in those bank accounts are realizing I need to invest elsewhere, whether that's in shares or property or other asset classes. They are definitely going to find their money moving out from there, and it'd be awesome to see that because if you've got property, it's going up. Number 3, first home buyers will continue to dominate. So 2020 was special for a lot of reasons. I'm gonna say special, but it was very different. And one of those things was first home buyer activity. And that actually doubled in 2020. So there was no reason for property not to go up. When we've got all these bad news in and around the media, we've got first home buyers being super emotional purchasers coming into the market and just flooding the market really. So we were getting priced out as investors. And for my clients as well, we were missing out on property because these emotional buyers were ready to pay just incredible amounts. Now, you can't really blame them because we had so many government incentives. Most notably was the 5% deposit guarantee. Now, this was insane. You could basically pay 5% deposit, and in that case, you would actually have to pay LMI, so lender's mortgage insurance. But because the government came in and they said, you know what, we'll back you up, we don't have to pay LMI, what that meant was a lot of people that thought they were going to be priced out are actually in. And so that's where we saw a lot of this price growth, a lot of price activity across the market. And I think in 2021, we are going to double what happened in 2020. The reason for that is we've got those incentives carrying over, and now we've got more certainty in the market, but we've also got all these people cashed up. So they're saving at a higher rate. We've still got government incentives out there, and we know what's happening with the virus. Well, at least, vaccines coming around, and we know how to deal with it. And that makes the perfect recipe for more buyers to come into the market, especially first home buyers. Number 4, regional property boom will increase. Wow, Ravi's talking about regional property again. Here we go, boom time, regional property this, regional property that. Look, guys, the end of the day, fact is fact. I'm not going to come here and start manipulating data so that I can show you that, oh my God, yes, regional property isn't growing. Guys, it's a fact. You can look anywhere you like. Now there's mainstream media around this as well. And that's the hype that I was saying that 6 months ago. If we start seeing that mainstream media come in and they start saying, look, lifestyle locations, these are regional towns gonna grow. And we've seen articles like that already. we are definitely going to have that convert into massive amounts of growth. And with that, I see this regional boom continuing. The rate at which regional properties had grown as an average was 11.8% in terms of returns. That compared to the metro markets or capital city markets was only about 6%, so 5.8%. So it's almost doubling what's happening in the capital cities. I don't think 2021 is going to be any different. In fact, I think the rate of growth we're going to see in regional markets will actually be higher than we've ever seen before, and definitely higher than last year. Number 5, national property growth in 2021 will double. So what do I think is going to happen this year in 2021? Well, I think those numbers will change. I think we will go from about 6% to about 8%. Now that is an average of all markets across Australia. So I know for myself and for my clients, I'm looking above 8% returns this year, and it's going to be amazing because we all know it's leveraged returns. So it's not about me putting in $50,000 and getting a 6% return on that. It's actually leveraging that $50,000 to buy a property worth $450,000 and getting the 6% on that. So I think the national property price will be a lot higher. The rate of growth will be a lot higher this year, about 8% as a return, and I'm expecting a lot more for where I'm looking at in terms of properties for my clients as well. Number 6, rents in inner city apartments will continue to fall and investors will run. 2020 literally made a lot of people's lives easier, but also a lot harder. Now, in terms of easier on the front, that it was a renter's market. We're not going to see anything different this year. When it comes to people that really suffered this year, investors, and most notably unsophisticated investors. So many people in the last few years, and you might be one of these people, so I'm going to tread carefully here. No, fact is fact. I'm going to tell you straight up that if you were investing in apartments in most inner city rings, Brisbane, Sydney, and Melbourne, you would be suffering from the fact that rentals have plummeted. They have just been shocking. I know that people have been suffering from low vacancy rates. I think the vacancy rates on high-rise apartments is about 30%. Wow. And so of course people have choice. Now, if you rent your property out or list it for say $400 a week, they are going around and shopping around and then putting each against each other. I've literally seen this happen even for myself because I'm living in an apartment and I'm renting. And so when I'm looking around, I'm going, this is easy. I'm making easy money by just negotiating, and it's not even that hard because there's so many properties available. So what I see happening in 2021 is that's going to continue to happen. It's going to continue to decline, and I think it's going to happen on two fronts. One, yeah, Airbnbs, maybe they come back, maybe they don't. It won't be to the levels of when we had international travel. And on top of that, we've got government incentives. So most people that can afford to buy an apartment, they're probably going with interest rates so low and government incentives on top of that with the grants, I'm just going to go buy a place. And so now investors that have invested in inner city apartments thinking, oh, well, everyone wants to live close to the city, are really going to find that they're going to struggle throughout this year. And I don't want to give that a negative tone, but it is what it is, and I think it will continue. Number 7, impact of home loan deferrals will be close to nothing. I apologize in advance to the doomsdayers and the economists, so-called economists, that predicted 30% drops in the Australian housing prices, because they suggested that a major reason we are going to have this huge collapse in the housing market was due to the fact that home loans could not be paid. So these banks came out and they said, look, we're going to defer your repayments. You don't have to make repayments for the next 6 months. In fact, what they did was after we ended the 6 months, they pretty much increased it for another 3 to 6 months, depending on people's situation. So what does that mean? Well, what we've seen based on the data is, yes, there was a lot of people that were putting out loan deferral payments. They didn't know what was going to happen. There was so much uncertainty. So at that point, fair enough. Like, you may think the market might shift a little bit depending on what they do. But what I was saying on this channel was, how do you see that if they're going to defer it for 6 months and then they're going to automatically go, oh, well, we've deferred it for 6 months, we've done our duties, now we're just going to let it be a free fall. You go out there, if you can't afford the property, you have to sell. It was stupid. I don't know who was saying this, but like, why were you saying it? It's just basic logic. It's not even about knowing economics. It was literally, what common sense is that? If they go and defer repayments for 6 months and now there's some sort of, improvement in the economy, there's a bit more certainty, why wouldn't they increase it and do it for another 3 months and then be able to go, you know what, we can just slowly get off this, and eventually most people will come back and start repaying their loans. Instead of what people were suggesting would happen is that banks will go out there and say, you know what, we're going to lose money on this property. You have to go and sell. And of course, everyone else is going to sell because no one can afford these repayments because we're in the middle of a COVID recession. So then what? They're going to lose out? No, they were never going to do that. And I kept saying this, I kept saying it, but hopefully you listened and didn't sit there and hope that these loan deferrals are going to come in, which meant all these properties, they're going to be mortgagee sales and I'm going to come in and pick them up for 30% off. It wasn't going to happen. Let's be real. So in fact, we've had some banks report that 80% of home loan deferrals are back to normal. So what I mean by that is if 10 people went out there and said, we need to defer our repayments, we don't know what the F's going on, we can't pay for it, that means out of the 10 people, 8 have resumed paying and they're back on track. Everything is back to normal. Now the 2 out of the 10 that are still waiting, now again, this is a generalization that's received from one of the banks that have said, well, you know what, we're going to work with them. We're going to see how we can assist them so that we don't end up in a lose-lose situation, which effectively is a mortgagee sale. Because you've got to understand, the bank loses money on those things. Yes, they've got to get debt collectors in. Yes, they've got to have the sale actually happen. They don't want to have that happen because they would rather have someone pay their repayments and have the property for a longer time and then sell at a profit to someone else who takes on the loan as well. That's just how it works in a nutshell. So in 2021, I predict that a lot more people will come off the loan deferral schemes and they'll actually go back to normal, paying down their loans as per normal. Now, interest rates are so low, the banks might even work with you to go, hey, let's just get on a fixed rate. We can reduce the interest rate, your repayments come down, everyone's winning, you can get through this period and then we're back to making profit. Number 8, investors will flood into the market. Investors like myself and a lot of my clients are sitting and waiting and waiting, and we are just licking our lips going, home lending restrictions are about to get eased. Now, if you're in a position to actually buy, again, non-financial advice, but you should buy when you can buy. It's not about waiting and hoping that something changes. Like the stamp duty cancellations, like the fact that home lending restrictions will be eased, you can't sit there and hope that those things would happen. They're outside of your control. And the truth is, this government has made it very clear they will do anything to avoid a catastrophe, but they will also make decisions on the fly. They will say certain things one day and a week later they could be implementing a completely different thing. So my suggestion is, if you can buy, you buy. But with this point, investors flooding the markets. Now, lending restrictions will be eased this year. I foresee in the second half of this year, a lot of investors will get their paperwork sorted and they will come flooding into the market. Now, we are going to see that 2020 had a lot of growth, but it was dominated by first home buyers. Some investors did come into the market because they were refinancing their debt structures and they were getting lower repayments, which meant their cash flow was better. Now they can come back into the market and buy some more property. But a lot of investors were already capped out at their maximum borrowing capacity. So what they were doing is they're saying, well, I'm priced out of the market, I can't do anything. But in this year, if the lending restrictions are what I think they'll be, then we're going to see in the second half of this year a massive push by investors to come into the market. So if 2020 was dominated by first home buyers, and we're going to see that double growth come into 2021 because the incentives and the grants are still there. On top of that, we've got investors coming in because now lending restrictions are eased. They've already understood. Investors, and I can talk on behalf of some of the smart ones, at least, we're all thinking the same thing. We know what property can bring us and we know the returns work. We also know, if you have done the research, you know what property looks like in the next year to the next 3 or 5 years. So this would be a great time to buy. And so I know a lot of people are sitting there on the sidelines and waiting for those announcements to be made so they can call up a broker or talk to their home loan specialist to get into the market. Number 9, RBA will take the cash rate to 0%, potentially negative. So currently the cash rate is at its all-time low. We've already know this. So it's at 0.1%. They didn't want to go to 0 because the media attention around that would just kill their life. So they thought, we'll cut the rate from 0.25% to 0.1%. Doesn't sound as bad as 0% because after that, you only have one move left. And that move is to move into negative territory. Now, I've been saying on this channel for a while that I think 0% cash rate is almost definite now. I think it's definitely going to happen this year. And I think there is a slight chance we will go into negative. Now, why I said slight chance is because they also know that along with all these other factors, they know the housing is something that they definitely are keeping their eye on. Now, there's so many other factors at play. I don't think they're gonna pay as much attention to housing as they did in 2018. And they had APRA sort of kick in because they were like, oh, we don't wanna increase rates. So instead they had them do their dirty work. But in this year, what I foresee happening is we're definitely gonna hit zero. So we could potentially see a minus 0.1% to minus 0.15% this year in 2021. Now, before you think this is ridiculous, what is this guy saying? You don't need to go too far. A Danish bank has just announced last week they are doing 20-year fixed rates at 0%. I'm not talking about the cash rate. I'm talking about the home loan mortgage rate. So at the moment in Australia, we're probably anywhere from about 2% to about 3% in terms of our interest rates. So your mortgage rate that you would have to pay. With a Danish bank coming out at 20-year fixed rate at 0% means you could borrow money for free. And I think we're not going to head that far down, but the reality is that it can happen. Yes, the Danish bank, it's operating in a different country altogether to the Australian market, and it's very different here. But at the end of the day, what you think is impossible is possible. So keep an open mind. And number 10 is commercial property will continue to decline. With work from home situations becoming ever more increasing and flexible, I think commercial property will continue its decline in 2021. Honestly, when you're seeing work from home situations become better for most people, they've got more flexibility, productivity is higher, most people aren't having to travel 1 hour back and forth, you're really having to question as a business, why would you want to be paying exorbitant amounts of rent for the space that you use? I think commercial properties will not only see a decline in values, but I think the rents will decline as well. And that's purely because of the vacancy rates as well. What I could potentially see happening is, I'm calling it out here, is at the sort of the last 2 quarters of 2021, we're going to see some major developers come into the market and buy up some major landmark positions, especially in Sydney and Melbourne. I think it's going to be interesting to see how that plays out. But essentially, if you're looking at commercial property, do it if you like. However, I will not be buying any sort of commercial properties in 2021. And that wraps it up. 10 top predictions for 2021 when it comes to property. I know that some on this list are ones that you really agree with and some that you're like, no, I definitely don't agree. I don't know what you're talking about. But it's going to be fun to look back in, I guess in 12 months time to see this exact video and how correct or how incorrect I was. Now, if you can, I have already said it at the start of this video, 300 likes in 2 days. So I'm releasing this today being Sunday. In the next 48 hours, if we hit 300 likes, I am dropping the next video, which is the best places to buy in 2021. I know you're eager because the last video about 2020 proved to be pretty accurate, and it's actually my best performing video on the channel as of today. So I definitely want you to smash that like button. And if you haven't already, check out the online course, a complete guide, a complete step-by-step guide to Australian property. So Confusion to Clarity is an online course that I've created. You can definitely go check it out. There's more than 3 hours of exclusive content and it's across 16 lessons. 4 modules. It definitely gets you from mindset to the fact that you can scale up your property portfolio and really take advantage of real estate, especially within Australia. Right now, you've just seen it, my predictions. They're all suggesting one thing. I don't want to state the obvious, but it is what it is. I'm really excited for 2021. I hope you are, because now it's time to act. It's time to execute, and I'll catch you guys in the next video. Thanks, guys.